Welcome back, everyone. Today, we're going to be talking about Alephium. So we're going to be going over what it is, how it works, the tokenomics, and also a price prediction. So we're going to compare the current market cap with the tokenomics to other projects as well to see where the price could hypothetically go in the future. So if you guys are interested in this type of content, stay tuned. Let's dive in. So Alephium represents a groundbreaking approach in the cryptocurrency realm, focusing on overcoming the hurdles of accessibility, scalability, and security, which are often challenges for decentralized applications. So it's not just another crypto project though. Alephium integrates innovative technologies like a sharding algorithm named Blockflow, a stateflow UTX model, and a proof of less work mechanism, which is pretty interesting, all working in tandem to offer a scalable, secure, and efficient platform in real-world dApp usage. Also, if you guys are interested in checking out a cold storage solution for your ALPH tokens, make sure to check out Tangem in the Tangem wallet, which I will link in the description below for a 10% discount. And also, I've made a bunch of videos on this. It's a cold storage solution wallet and a Swiss-based company. The project also prioritizes energy efficiency, setting it apart in the crypto space. Founded by cryptography expert Chang Wang in 2019, Alephium is quickly carving out a niche for itself. So now let's talk about the fun part, the tokenomics. So at the core of Alephium is its native token, which is ALPH or ALPH. So it has a capped total supply of 1 billion ALPH tokens, and the launch of its mainnet saw the mining of 140 million tokens, accounting for 14% of the total supply. The strategic distribution of the remaining tokens mined over the years aligns with the long-term objectives of the project, nurturing a sustainable growth environment. So the ALPH token serves as the primary incentive for miners on the Alephium network, playing a crucial role in maintaining and processing the blockchain. So now let's talk about the components of Alephium. So Alephium stands out with its distinctive components, each contributing significantly to the network's overall functionality. So for one, we have the Blockflow sharding algorithm, which is a cutting-edge approach, enhancing the traditional UTXO model for scalability and employing a DAG structure for shard consensus. Two, proof of less work or POLW. This unique mechanism combines physical mining efforts with coin economics, effectively reducing the energy footprint and setting a new standard in eco-friendly crypto mining, which is definitely a hot topic. Three, stateful UTXO model, offering unparalleled scalability and programmability at the base layer. This model alleviates Alephium security and efficiency, rivaling established platforms like Ethereum. 4. Alfred Virtual Machine. Alephium's proprietary VM revolutionizes chain structure, tackling key issues in dApp development, enhancing security, and streamlining smart contract transactions. 5. Ralph Programming Language. Tailored for dApp development, Ralph empowers developers to create robust, secure smart contracts, particularly targeting the burgeoning DeFi sector. Now let's talk about the functionality of Alephium. Alephium harnesses its innovative Blockflow algorithm to significantly boost transaction throughput, reaching speeds of up to 10,000 TPS, a stark contract to Bitcoin's 7 TPS. Its POLW mechanism dynamically adjusts mining effort, optimizing energy use. The stateflow UTXO model ensures a robust, scalable environment for dApps and smart contracts. Furthermore, the Alfred VM and Ralph programming language enhances the development landscape on Alephium, providing powerful tools for creating efficient, secure dApps. So there's a bunch of use cases from DeFi to blockchain gaming, supply chain management, healthcare, and asset tokenization. The recent introduction of an Ethereum bridge significantly enhances interoperability, allowing asset transfers between the Ethereum and also Alephium network. This update marks a critical milestone in Alephium's development, showcasing its commitment to seamless blockchain integration and user accessibility. When we're talking about the pros, for one, it has exceptional scalability and transaction throughput, then advanced and secure programmability features, and also remarkable energy efficiency in mining. Then when it comes to the cons, Alephium is a newer blockchain, so it faces uncertainties in long-term stability and market resilience, then gaining widespread adoption. So this is going to be a big challenge given the competitive nature of the blockchain sector. And lastly, integration with existing future blockchain ecosystems could present interoperability challenges. Now, when we're taking a look at the token price, we can see here that it is actually at the 67th position. So it's also trading on not that many exchanges, right? Like there's Gate.io, which holds a large, significant part of the volume, but it's mostly just Uniswap. So it's mostly just the DEX. And then, after Gate.io, it's MEXC, and then Bitmart, and then a couple others that I'm not really familiar with. So it's really not listed on many exchanges either. So there could possibly be a lot more exchanges to list the token in the future. Now, again, when we're taking a look at the current circulating supply, we can see here that it's only 6.39% is currently out circulating. So what this means is that there's going to be obviously a bit of inflation, considering that there is only 63 million when there's going to be a total supply of 1 billion in the future. So something to note, not necessarily a bad thing, right? There's tons of projects, with a billion tokens, and there's going to be tons of inflation, but those projects have done very well in the future. So this doesn't necessarily mean that it's bad tokenomics. It just means that there is going to be some inflation until the last token gets emitted into supply. Now, when we're taking a look at the pricing for the past month, it's performing quite well. It's coming from 61 cents a month ago, and it's up to $1.09 right now. And so it's up 67% in the past month, which looks good. Now, if we take a look at the past year, it also paints a different story. It's up 1,700% coming from, 0.06 cents. Back in January of 2023. So it's looking really good when we're taking a look at the price action and also looking at the market cap. It has that lucky number, right? 69 million. And so it's at 435 when we're taking a look at that position on CoinMarketCap right now. When we're taking a look at the all-time data, we can actually see here that, during the ICO, we can see that it actually bounced. It looks like, at least on CoinMarketCap's data, we can see here that, went up to around $1.29 here and then completely crashed after that. So it looks kind of bad, when we're taking a look at that, almost like the ICP event, right? But it's not necessarily a bad thing, considering that the project is still obviously active and continuing to grow since that point. And now the price is also recovering, which is also a great thing. So when we're taking a look at the price prediction in comparing Alephium and the ALPH token to other projects and market caps, let's do that right here. So if, for example, Alephium had the same market cap as of Bitcoin, hypothetically right now, at 840 billion, then one ALPH would be worth $13.2 thousand. Now let's move a little bit further here. Like, for example, it's at the 435 position, around that mark right now. Then let's move it to, let's just say, the 100th position on CoinMarketCap. Where would that put it right now? That would put it at around eCash at around $667 million for a market cap. And that would put the potential price of one ALPH to $10.47, or an upside of 869%. Moving even further, hypothetically speaking, if it was that of, for example, the 200th position right now, if it was in that range, that would put the market cap at 258 million, and then the potential price would be $4, or an upside of 276%. So it's also super important to compare the current price to specific different market caps that at least you're aiming for, right? If you're setting, profit, take profit zones, obviously not financial advice, but that's obviously super important, because to just think that the coin is going to go to, for example, $50,000 is really not that possible, I wouldn't say, obviously. So it's definitely something you should take into account when you're, trying to obviously take profit, is to see where the price could actually hypothetically go, considering the, circulating supply of tokens right now, and also the current market cap right now, and then comparing it to other projects as well. Anyways, guys, my name is Trevor, also known as MintMax. If you like this video, then do me a favor by minting me a subscription down below. See you guys in the next one.